The collapse of FTX has raised all sorts of questions for regulators everywhere. But at the heart of it is this: will stronger rules really stop this sort of thing from happening again? Here's the rub with all of this. Consumers very clearly need to be protected, but it comes with a trade-off. Clamping down hard on crypto may ultimately mean fewer risks in the future, but it might also be at the cost of innovation. Getting the balance right and doing it quickly are likely key to driving crypto adoption, and the jurisdiction that gets it right is likely going to become the global crypto hub. The trillion-dollar question, of course, is who is that going to be? In Asia, Singapore and Hong Kong were both known for favourable attitudes towards innovation.
Singapore in 2017-2018 was the most popular venue as foundation for ICOs and tokenization. Hong Kong was the homeland of many early adopters of crypto.
Both cities have also recently made moves to push forward with regulation and innovation. In October, Hong Kong's government said it was looking into giving retail investors access to virtual assets. Financial Secretary Paul Chan has since reiterated the city's plans for becoming a crypto hub. He said FTX's collapse has simply shown the need for more transparency. Meanwhile, Singapore is investigating a CBDC via its Project Orchid, as well as innovation in DeFi and tokenization via something called Project Guardian. Both cities are, of course, long-standing rivals, and for more on that crypto competition, do check out our episode on it. But speculation is also growing about whether they can work together to make Asia the biggest place in the world for crypto. Lily Z. King of crypto custody platform Kobo told Forkast she thinks the way the two cities complement one another could ultimately attract investment from around the world.
The Hong Kong exchange is where all the tech giants companies like Alibaba, Tencent, Bilibili got listed. And those big tech giants, they have strong interests and ambitions to explore crypto world as well. And Hong Kong might be the perfect hotbed for them to do their crypto experiments.
Lennox Lai of crypto exchange OKX agrees. He added that Hong Kong's special status is another advantage for the city. Under one country, two systems, Hong Kong's basic mini constitution, the city is part of China but operates its own economic systems. Mainland China has, of course, banned crypto trading since September 2021, but the country remains keen on developing blockchain technology.
So China will think Hong Kong as the gatekeeper or the testbed for anything frontier. If China want to do something about it, why not try for Hong Kong first?
Lily also says Hong Kong can tap into the mainland's pool of engineering talent.
Singapore at the same time has a big influence across Southeast Asia, and it's considered to have very stable policy towards a rule of law, as well as the sensible decisions making made by their government from top down.
Lily further believes healthy competition between Hong Kong and Singapore will lead the two into taking bolder, faster steps, and that could further stimulate innovation. The Southeast Asian region also offers a different approach to developing technology for crypto compared to the United States and Europe. Girat Sresopa of Thailand's BitCup exchange points out that countries like the Philippines and Indonesia remain very much cash-based societies. According to the World Bank, almost half of the population of those two countries is currently unbanked. But with a phone and an internet connection, they don't necessarily need a bank.
We foresee that in the Southeast Asian region in particular, the existing infrastructure is not as deep or as expensive as the West. We can leapfrog because there's no opportunity cost, right, to use the latest technology. There's no legacy. A legacy, system slows everything down.
In comparison, Top says that people in the West are, of course, used to current banking technology. They already have access to credit and can easily send money to family and friends, and so they're less likely to adopt crypto quite as quickly. Lily adds that cooperation between players is vital too to the development of new financial infrastructure. She says that means everyone from protocol builders to banks and government departments need to work together. And that is where the US seems to be struggling.
I think the highly ideological political conflicts and the lengthy political debates in the States is the biggest obstacle for the regulation clarity to arrive quickly. It was not as efficient as Asia market to quickly bring government institutions together with financial and private institutions together to experiment use case for crypto.
Various proposals for the regulation of crypto are stuck on hold in the US as well, following a pause for October's midterm elections. That leaves it unclear as to which digital assets will be defined as securities and which are going to be defined as commodities. Add it all up and the US risks falling behind, and Top warns that he is seeing a different divide developing, which could leave companies looking for support closer to home.
The world is moving towards a more fragmented one, right? Not just on the crypto industry, but with the war going on, with the two superpowers, major conflicts are happening. There is a divide, right, between the West and the East.
However, he adds that this is not necessarily benefiting anyone.
40% of the world's GDP comes from collaboration, global trade. We are more interconnected than we think, and if we're not helping each other, working together, 40% of the world's GDP is gone from collaboration. We just need to fix globalization to be more fair, more inclusive, more diverse.
So will there ever be one clear winner between the US and Asia? Well, maybe not.
I think US will continue to be the dominant player in crypto economy because of its access to talents, market, and the technology. But at the same time, Asia might lead certain dimensions of crypto innovation.
It has been a momentous 12 months for the crypto sector, and we at Forkast have been trying our best to cover everything that's been going on. If you like any of the content, please hit that like and subscribe button. Please share it. It means a lot to us to be a part of this conversation, and we really want to hear your thoughts as well in the comments below or on social media.